All right, so building corporate credit. Now, this is part two. We're still going over the basics. Again, guys, some people that are going to watch this right now, it'll benefit them, but there are going to be people that are going to come along later on that are going to go back through these videos and they're not going to have any understanding whatsoever of credit or personal credit, and so they're going to need this education. Right? If this is not you, then just move on. Warning, this is not a marathon. It is a marathon. It's not a sprint. It's a lifelong journey. Okay? So be patient, work the system, work it all, and ultimately you're going to have an amazing score, an amazing profile, and get whatever funding you need on the business side. You must build your credit score and your credit profile. We've already been over this. Personal credit is the foundation to corporate credit. You do not need to pay gurus to fix your credit or to build it, right? You can do all of this completely by yourself. You don't need net 30 accounts. You don't need any of those things. The corporate credit building programs out there give you these net 30 accounts and these other accounts because they're affiliate links, and they're making a commission off of everything that you're buying, everything that you're purchasing. They're doing an affiliate payment for it, right? So basically, they're forcing you to go out and buy things for your business to build up your credit on the business side. You don't need to do any of that. You can do a personal guarantee or a PG from the personal side, co-signing for your business, and build amazing credit. Don't need any of that other stuff. Okay, you're going to find out there's a lot of lies out there. There's a lot of deceptions, and we're going to cut right through all of that stuff in this series. Nothing in this video is financial advice. I am not a financial advisor. I'm not a lawyer. This is for entertainment and educational purposes only. Never take shortcuts when building your credit. The ultimate goal is to become fundable, both on the personal side and ultimately, once you get that established, to skyrocket the business side. Not everything is covered in this series, and let's move forward. You need to know your due date and your billing cycle. You need to know your due date so that you always make payments on time, because that's 35% of your credit score. We'll talk more about that in later videos when we do a deep dive into the pie, or into the circle, to credit score, the FICO credit score. But you need to know the due date, and you need to know the billing cycle, because when you get to the end of the billing cycle, you want to make sure that your utilization on that card or that loan or whatever it is, you want to make sure your utilization is down where you want it for the score that you want, right? So that you want to make sure that you know that date, that cycle date. When that cycle is coming to an end, you want to pay off whatever you need to pay off to get that to the utilization percentage that you want, which should be 5% or less. Relationship banking is where everything's at. Okay, you're not gonna, you can do everything else on the world, but if you have relationship banking, it'll take you places that nothing else can. And we're going to talk more about relationship banking. I can't cover everything, but we will be talking about that, because this is where everything's at. Everything. Developing relationships with banks is what accelerates you. Never open more than 6 bank accounts in a 12-month period. If you do, you're going to be put on the check system. You can probably get away with 7 or 8, but I wouldn't exceed 6 bank accounts. Okay. Again, you're going to be building relationships with banks. That's what you're going to do, and that's what's going to give you the power, because banks have an internal score. Okay, you have the FICO credit score, but banks hold their own credit score based on your relationship with that bank. So relationship banking can take you places that nothing else can. Okay, again, these are things that they won't teach you, they won't tell you, because they're more interested in making commissions off of you or making fees off of you, whatever it is. Always take time to research any credit card, loan, or the like, and all the data points that come with them. Okay, always do your research. We're going to talk about this a little bit more, but you got to do your research. You got to know what the data points are when you go to apply for that credit card or that auto loan or that student loan or that personal loan or that mortgage or whatever it is that you're going after. You got to know the data points so that you can align yourself with those data points and easily get what it is that you need. Okay, this is a credit score calculation. Again, payment history, right? You want to make sure that you're making payments on time. This video is going to be a little bit longer than the previous one. I apologize, but I got to get through the basics, guys. I may end up breaking this into 2 videos just to keep them short. But payment history is the biggest chunk of your score. So you always want to make sure you're making payments on time. If you've already got late payments on your credit report or your credit consumer report, guys, you can get those removed. It's not that difficult. It's not that hard. You got to know what the law is. Okay. and we're going to go with the law, because the law is what reveals the truth and gets rid of the lies and deceptions. So, which the gurus want to lie and deceive and control and just take money from your pocket. Basically, that's what they're doing. Just like the credit builder programs, the same thing. They're getting affiliate commissions. They're making money. They charge you up front. They're getting affiliate links, affiliate payments. They're getting all this stuff. They're getting paid over and over and over again while you're just trying to fix your credit. You can do all this yourself. All right, FICO score calculation. FICO is Fair Isaac Corporation, or Fair, comma, Isaac and Company. Okay, but it is a corporation, and it is just a data processing company is what it is. It's a corporation that processes data to give a score so that banks and other lending companies and such can have a score to base it on to know your credit worthiness, right? But your FICO score has nothing to do with your consumer report in any way, form, or fashion. When you pull your TransUnion, your Equifax, any of them, from the actual TransUnion or Equifax, when you pull that, there's no FICO score. Okay, FICO score is completely and utterly separate from your consumer report. You have to get your consumer report right, your profile right, and then your FICO score automatically goes into the 800s. Okay, so but FISIC, matter of fact, let me pull this up right here. So this is the stock exchange, right? We're looking at the S&P 500, NASDAQ, Dow Jones, etc., right? We go in here and type in Fair Isaac, and you see FICO, right? It's a New York Stock Exchange. It's the Fair Isaac Corporation. That's all it is. It's a data processing company. So just so you know that, so that you have that comprehension there. I was going to say understanding, but you don't stand under anything. If you stand under something, you're under that jurisdiction, right? So you have a comprehension that the FICO score is it's just a company, right? That's all it is, just a company. Always know your data points. Always. Before you take action on anything, before you get that credit card, before you get that loan, know the data points. Every bank has requirements. Every card has requirements. Every loan has requirements. Do your research. Know what they're looking for and execute on it, guys. Do research. You got to know what you're doing beforehand so that you're in perfect alignment with all the requirements so that when you go to apply, you got it. Very important. Learn to credit stack, which is seed time and harvest. Where are we at? 8 minutes? Okay, so credit stacking. Some people like to do it. Some people don't like to do it. It's a personal opinion, right? A personal preference. Up to you how you're going to do it. You choose. But here's what it is, and I like it personally. If you go back up here, you have this thing called length of credit history. You also have new credit. You have types of credit. And these three things, which you got green, orange, and blue. Green, orange, and blue. So that's 15, 25, 35% of your score, right? Now, credit stacking is where you do seed time and harvest. So you wait for the inquiries, the new credits to get to 6 months, right? So that there's no inquiries on your report that are newer than 6 months. And then you go in and you execute on new accounts, right? New credit cards, a new student loan, a new auto loan, a new mortgage, whatever it is that you're going after. And at the same time, you are establishing the mix of credit or the different types of credit. Okay, so basically what's happening is when you credit stack, you're waiting for everything to drop on your score so it's up high. Then you go execute, and you're very particular. You've done your data point research, so you know that this card pulls from TransUnion, this card pulls from Equifax, this card pulls from Experian, and so, but it doesn't pull from the other ones. So I'm gonna strike all three of these at once. My score's gonna drop, but I'm in seed time and harvest, right? So now I've got more credit available to me, and I'm waiting for these things to age out so that my length of credit or age of accounts grows and expands. And what happens is you get 4 or 5 different new accounts all at once. Your score falls, right? Because you got new accounts. So you got inquiries. Your length of age just significantly fell. All these things happen. So your score falls, but now you've got everything you need to sit back, work those cards or loans or whatever it is, and then as time goes forward, you're getting age of account, the inquiries are dropping off, all these things are coming together, and your score is just going up and up and up. What credit repair companies try to do is they say, oh, no, don't get no more accounts while we're working on your report, right? Why? Because if you get new accounts, you're already starting the process of building your credit profile. They don't want you to do that, right? They want you stuck right here while they work all these things, and you're focused on this thing instead of building your profile. So learn the credit stack. Credit unions are your friend and helper, okay? If you have perfect credit, if you're in the 800s and all you need is to build out your profile, great. Then all you got to do is go get local banks, regional banks, and national banks, and build relationships with those three things. If you have bad credit, horrible credit, or decent credit, then you want to go to the credit unions because they're your best friend, right? They're memberships, and once you're in them, most of them have various different types of secure loans, secured credit cards, all these things where you can begin to build your credit back. Remember, payment history is 35% of your score. So if you can get a new credit on your report, on your consumer report, and start paying it on time, you are building your score, right? Your age falls because you got a new account, but as you sit there and make payments, your age is going up as well. Your score is going up. So you want to focus in on credit unions. How to get into most credit unions, not all of them, because some are state specific or regional specific or military specific or whatever. But to get into most of them, you can go sign up for American Consumer Council. It's $15 lifetime. If you can't afford $15 to get access to credit unions that can help you to build your credit, I don't know what to tell you. You can't borrow $15 from somebody. It gives you access to your helper, the credit union. You can also do the Financial Fitness Association. It's $8 per year, and in 1 year you can have your score at 800. No big deal. Credit profile basics. That's what we're covering today, and we're at 12 minutes. So I'm going to cut it here, and then we're going to pick up here in the next video because I know a lot of people don't like long videos. So peace out. Catch you in the next video.